Hi, this is Acme with the US stock highlights here on Share Talk for Tuesday, the 1st of December. Starting off with what could be described as the ghost of Christmas past, or at least last year, Acst Pharma. We had that horrible double top and collapse for the shares over the turn of the year, and even though there was a mild rebound, never really got back off the ground. That said, over the near term here, the last few weeks, last couple of months anyway, there has been a recovery of sorts. The target of a 37 cents target there, the top of a late August triangle has been hit, and end of day close above that, and we could see a follow-on move towards the 200-day moving average, currently around 47 cents. The upside argument valid while we hold above late November resistance at 32 cents, so above 32, looking for 47 hopefully over the next few weeks. Stock which I covered recently and is worth a revisit is Arlo Technologies. Here you can see that we've had the shares hitting a resistance line target around $6.70, where that was effectively the top of the channel from the middle part of 2019, the summer of 2019. We've actually overshot that resistance line there, retested the old peak of $7.30 from August this year. An end of day close above $7.30, though, we could get around $8.50 as the next target for the shares, which is an early 2019 resistance line projection, and also sort of where the shares were found resistance on the way down at the beginning of last year. In fact, the upside scenario here valid while we hold above and while there's no end of day close back below October resistance at $6.28. So above $6.28, looking eventually for $8.50, hopefully as soon as the end of this year or the end of this month, perhaps more appropriately. A stock which was a big name a few years ago, at least a decade or so ago, was BlackBerry, and rather disappointed that I wasn't able or missed out on covering the stock previously. You can see there was quite a clear break of resistance line there from May around $5.25, and we had a decent push towards $6, retesting the old June resistance area before the latest gap to the upside. What's interesting now about today's price action so far is that we found support around $7.17, which was old resistance in January, so the initial 2020 resistance becoming a new support. While we're above that, looking for at least $10, which is a late September 2019 resistance line projection. If you're a great fan of the shares, I suppose you might be looking for a bit more, let's say up to $12, which is that higher resistance line projection. But at this stage, $10 I think is a reasonable destination to shoot for after this latest gap that we've seen. Moving along to a stock which is slightly more obscure, but may eventually become famous in its own way, Corporación America Airports. And here we've got another gap through resistance. In this case, the resistance from June, $3.59, while we're above that, looking for a target over the next couple of months as high as that August resistance line projection from last year, currently heading towards the $8.80 zone. As I said, hopefully over the next 1 to 2 months for that. Upside scenario remains valid while there's no end of day close back below the $3.60 area, which is today's support and the old June resistance. Onto a stock which is certainly a new name for the US stock highlights, Cdak Biosciences. The interest here really coming from the way that there's hardly any charting furniture at all to look at, and we're sort of left trying to guess where the shares may go. The best guess at the moment is that we're in a rising trend channel, really from I suppose the beginning of November. Top of the channel, the upper parallel. The guess is that it's heading towards $24, and that upside valid while there's no end of day close back below the initial resistance for the shares at $14.40. So a reasonable risk reward situation, especially if there is any dip towards that mid $14 area. Onto a stock which has an even more powerful look to it in the near term, with Auris Medical Holdings, a vertical move today, breaking resistance, former resistance on the way down and that was in summer of last year, or late summer last year, so around the $3.15 area. While we're above that on an end of day close basis, looking towards an August 2019 resistance line projection, currently pointing as high as $8, and that could be seen hopefully as soon as the next 1 to 2 months, i.e. the end of January. If you're looking for a potential stop loss point which is nearer than the low of the day, then probably the $3.60 area would probably be the tightest we could get at this stage, which was basically resistance on the way down. Going on to a stock which I did cover quite recently and seems to be flourishing quite well at the moment, Fstx Therapeutics. Here we see that the shares have managed to gap higher after that final bear trap below $4, which was very useful as a charting indicator. Also the neckline being broken there at $6, around the $6.20 area, was also a pretty good giveaway in terms of upside to come. And the view now is that at least while there's no end of day close back below the current intraday support at $7.82, we're looking towards a potential resistance line target, triangle target, top of triangle target there from early this year up to as high as $13, hopefully to be hit by the end of next month. At this stage, only an end of day close back below that last resistance in November at $7.48, really delaying the upside scenario. Another new name to look at and perhaps wonder is Jaguar Health. Here you can see that the shares have gapped through the 200-day moving average. There is support below that around the 39 cents area, so above 39 cents we're looking for further upside on the shares. Ideally we have an end of day close above the 200-day line at 45 cents, but even if we don't, we've got that support at 39 cents, and the best case scenario target here over the next 1 to 2 months is up to $1, $1.10, which is the top of the post-June triangle formation on the daily chart. Moving along to a stock which is memorable, if only for its name, Mogo. Here you can see that we've got the shares breaking out very nicely indeed. The initial November resistance there at $2.46, and certainly while we're above the $2.50 area, the last peak was $2.56 in November. We should head higher within that rising trend channel from the end of June, currently pointing at $7, and that target hopefully will be reached as soon as the end of January. Going on to a stock which is less familiar, I think, to the US stock highlights, Molecular Biotech. Good name though. We've had a gap through the 200-day moving average for this stock at 0.88, and at least while we're above the November resistance at 0.85, 85 cents in other words, looking for further upside. Best case scenario target here over the next 1 to 2 months up to $1.90, which is the top of the rising trend channel from May. Looks rather ambitious, but it does pay sometimes to be ambitious in this particular area. Couldn't resist looking at Mrna because that keeps on trucking. Fresh highs hit, another fresh high hit today, a near-term high up to $1.78. A bit of a key reversal to the downside, but hopefully support coming in at the gap floor at $130. While there's no end of day close back below the floor of the gap from last week, we could still see a retest of the $180 zone over the next few weeks. This stage already back below $1.20, and that resistance line there from May really delaying the upside scenario or calling time on the recent rally in the Mrna shares. Moving on to Ontx, which is another new name in the near term for us. Here we've got the shares gapping through neckline resistance from October. That was at around 34 cents, and while we're above that on an end of day close basis, looking for higher prices here. The initial target there was the 200-day moving average at 45 cents, but we're looking for up to 60 cents at that August resistance line projection, while we hold above that old October peak at 34 cents. So above 34, looking for 60 cents on Onconova Therapeutics. Finishing off with a stock which is almost like become the mascot, the lucky mascot for the US stock highlights, just because it's such a small market cap and well, such a small share price rather. So a real penny stock situation. Interesting here that we had a gap in November through the 50-day line, and we've now had a gap through the 200-day moving average, currently at 16 cents. We can maintain at least the 200-day line on an end-of-day close basis. We're looking hopefully towards the top of the broadening triangle from the beginning of the year as high as 38 cents, hopefully over the next 1 to 2 months. This stage already back below the recent swing low at 11 cents, really delaying the upside scenario for Zomedica. That's it for me today. More updates tomorrow.